Hey everybody, welcome to This Week in Pre-IPO Stocks podcast. With me, I got Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Clint Sorenson, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Okay, I got three topics today. Instacart IPO, finally, right? Databricks cuts a deal with Microsoft, and we got Securitize buys Onramp, okay? All right, so first of all, let's do Instacart. You guys ever done these at-home delivery, like grocery delivery services? Like if you have, which ones have you used?
My wife uses Instacart every week, right? So she uses Instacart. Yeah, uses Instacart, goes to the grocery store. Everything's made, brought out to the car, put in the car. She drives home. So she uses Instacart
likes it.
all the
She
time.
likes it.
Loves it. Yeah, and it's the Publix, which is the grocery store chain where we live.
Yeah.
It's got a partnership with Instacart. Instacart's did a great job kind of making that the delivery mechanism. So, and it's super easy, right? We don't have to go in the grocery store, walk around. If you send me in a grocery store, I don't know about you guys.
Forget it.
But
you get lost.
I'm a lost dog in the grocery store. I'm like asking everybody, hey, where's this?
Yes.
It's the worst. Plus, I'm hungry when I go typically. So I'm like getting all kinds of extra. It takes me 3 hours to get through the grocery store.
Yeah, I respect that you asked though, because some people go in, they don't ask, and then they're just like walking in the aisles, and it's like hours just to find like one thing. You got to ask somebody. I think you have to ask, right? It's important. It's important. Yeah. So Nick, you use any of this stuff? Like we're New York City guys. You do these like grocery delivery stuff?
I love going to Agatha and Valentina and paying through the nose for everything.
Okay, Agatha and Valentina is like the what did you call that? Like that's like the nice grocery store in the neighborhood,
it's the nice
right?
Italian grocer up the
nice.
street. Yeah. It's beautiful. It's beautiful. But my wife, would much prefer to do it the efficient way, and she's data and analytics day in day out, probably more so than myself. So she goes through. Last order was bananas, eggs, milk, and then 50 other items. She hits go. It's done within 5 minutes. It takes me like an hour. I'm like, Clint.
So she does use it. Does she use Instacart or does she use something else? She uses Instacart.
Sounds like Instacart.
No, that's whatever the one in our neighborhood that's constantly around. I
don't think Fresh Direct. They're always down. Yeah, they're on like 75th and 2nd. They're right there, parked out on the middle of the street, taking up 3 lanes of traffic. Right. Yeah, but
we're on with them.
Well, listen, so we used Amazon forever, right? And it was Amazon Fresh, right? We didn't use Instacart, Amazon Fresh, but then we started to use Fresh Direct because it was like less expensive. It's like I got to tell you, it's like significantly less expensive to order from these like online delivery things in New York than it is to go to the grocery store. It's wild. It's like a lot less expensive. It's like much less expensive. But then I got to tell you, I was with somebody this week and they said you got to do Instacart because you can buy like from Sam's Club or Costco or whatever, right? Like you can get to the big box stores. You can get those going, right?
Yeah. We're on Seamless too much.
It's better.
But that's prepared food. But now I think within Seamless, they also pitched GoPuff, which I think the three of us have seen go by the wayside. I mean, we've not seen that pop up on the secondary radar
tough.
For 6 months. Really not much of anything.
No, all those like fast delivery convenience store shops have kind of like gone by the wayside a little bit, right? It's
right. Well, they
used to be all over
boom.
Too. Yeah,
COVID
man,
boom,
that's
man.
exactly what it was. That's exactly what it is. Okay, so all right, back to Instacart. So now that everybody uses a service like this, right, which is interesting, I find that super interesting. But so Clint, these guys are IPO. Like, good time to do an IPO. You think in September maybe?
No. I mean,
what do you
it's
think?
A great time. I think they should have gone IPO before COVID in hindsight.
Yes.
But you know, it was funny back then. I wanted to make an investment in Instacart, and we were trying to make an investment with them. And this was like right before COVID. No, it was like beginning of COVID in 2020.
Okay.
And like right after COVID hit and everybody was home, they went to the moon, right? They had no problem raising capital at that point. So I think they should have went public then. But no, I think if you can go public, if you can do it now, do it. I think it's a tough time for anybody to go public again, going back to the liquidity cycle, but we'll see how they do.
Right. And then, okay, so then Nick, I'm assuming these guys are about to go, and that's pretty like, it's in the media now, right? So the secondary markets, I would think, has like dried up, right? Because it's so close, or there's still bids and offers out there.
Yeah, you shot across the article and suggested they fell from that 39 billion valuation down to about 10, and that's actually where we're roughly seeing it. We're seeing it
Okay.
like 10.9 billion within the secondary market. So you kind of expect, you know what? I'm curious where that 10 number came from, but you also want to pop off the back of that. So if it's trading in the secondary prior to IPO, what do investors want to see? They want to see a 10 or 20% pop. So yeah, really, really curious as to where that's going to come out. But secondary has it pegged very similarly to what the news has.
This is going to be an interesting IPO because I think this is one of those companies who did not do a primary round. Okay. They didn't have some big secondary where they kind of like repriced in the private markets on an institutional level. They just went from like a very high number to IPO. Right.
Yeah,
and
I think it was February of 2021.
Yeah, I mean, that's going to be very
round.
interesting to see what happens because I got to tell you, if these guys have a good experience, some other people might be like, oh, you know what, maybe it's okay. Like, you know, like, yes, it's not where we were at our last primary round, but we can get out and market, and if there's the secondary market, we can kind of go from there and it's okay. Right. That opens the door, I think, for a lot of companies to hit the market, to hit the IPO market again. That maybe, you know, I think we're looking for a path to get there. But I'm trying to think who else, like Reddit's been out, that there's been a buzz that they might go, right? Like this could be a bellwether event for these secondary market stocks, right?
If they
nobody wants to be first. Everyone wants to say, okay, everyone at Instacart looking over at Reddit, seeing what they're up to. Everyone at Reddit's looking back.
Yeah.
Companies don't look alike at all.
It's like that Spider-Man. Everyone's pointing at each other. You go first, right?
You go.
I love it, man. I love it. All right, let's talk Databricks and Microsoft. Okay, so Clint. So Databricks. Okay, so Microsoft has this relationship with OpenAI, right? Now they cut a deal with Databricks. Now it's different because Microsoft's got like their own models. Databricks gives you like the tools to make your own model. Okay. So like Clint, you're running would you make your own? If you're a business owner and you want to do this, do you want to make your own model, or do you want to outsource that to like an OpenAI, which is kind of like at this point, it's kind of like proven. I think it's like people are generally accept that this thing works, right? What do you think?
I want to do both. I want to do both, right? There's going to be some applications where doing it on my own, creating my own model makes a lot of sense, right? Specific niche use cases, but it also makes a lot of sense to outsource it to try to, as quickly as possible, build and deploy. So I think you do both, right? You have to have a good kind of trend following approach to this AI world, right? Or anything AI related, where you have to have an open mind. You almost got to diversify, keep your risks small in terms of any one concentrated bet, and just go with the trend and be prepared to shift, right? You got to be prepared to shift and adapt. And so I think this is a smart move by Microsoft for sure.
Yeah, well, it's definitely interesting to have like more of an open architecture type model for them, right? From Microsoft, right?
Oh, I'm a big believer in open source everything, right? When you look at that was the in my opinion the single greatest. Well, I don't know if it's the single greatest, but it was one of the most pivotal changes in tech for us as a society, was the shift to open source. And I mean, you look at like Red Hat, right? And IBM buying Red Hat. Red Hat was a great kind of first example of that. And then legacy big tech had to adapt to it. And I think that the development is in order to keep up and deploy and continue to innovate, you have to be able to develop quickly, and you have to move quick. And in order to do that, open source has enabled that. Open source has enabled our app culture. Open source has enabled the metaverse. Open source has enabled almost everything that we enjoy today. And I think you have to have it. And so I think you have to embrace it. And Microsoft's doing that.
Yeah, I like it. So Nick, Databricks is on like a tear, man, right? Like I looked into ApeView this morning. Since like May of 2023, which was kind of like right after OpenAI did their their last round, it's up 50%, right? So what is that? 4 months, it's up 50%. So things on a total tear. Like you got to be seeing a lot of activity, right? In this name, a lot of people talking about Databricks because there's not many stocks that are up, right? Certainly not that much in the secondary, right? So this one's like an outlier almost.
Yeah, and I think they're playing it right, very much to Clint's tune. I mean, Databricks acquisition of Mosaic ML, very important. Now all of a sudden, doesn't matter whether you want to go the the trained OpenAI route, or now you got to bake something in house, you've got every option you could possibly imagine. And Microsoft is going to get their piece, whether it's
Yeah.
compute or storage, right? And yeah, Databricks is a perfect part of that solution. And they're just playing it right, playing the market right. Like I had 90-minute conversation about models that we have to train in house, and guess whose name came up immediately? It's Databricks.
Oh,
you
really?
know? So
That's
it
cool.
is maybe it's because we're looking at the thing every damn day.
Sure. Brand recognition, right?
The brand recognition works great.
Yeah.
But yeah, I think there are a number of directions that you can go, and then you look at what Meta, almost said Facebook, is looking at, and they're kind of more in gear to that direction with their Llama 2,
Right.
And that being a nice competitive aspect of things, putting their technology in the ring. So
Yeah.
I think they're going to continue to perform. I think that they could be certainly getting very, very large for an acquisition target, and maybe they want to think about every different avenue here in terms of how they want to go. But they're doing fine staying private. That's for sure.
Yeah, that is true. I mean, it is interesting though. Clint, like you brought up a good point, Matt. I could see like larger companies who have the resources, like wanting to do that in house and super fine tune it to exactly what they need and everything else. Where like a small or medium business owner, right, would just be like, yeah, I want to totally outsource that to OpenAI. Like, I'm not going to get into the weeds. You know what I mean? Very interesting.
I mean, it depends on your use, right? So if you've got to take into account your own customer data, and you want to keep it corralled, or you want to take into account certain aspects that are more recent or relevant to your sector, we also certainly feed documents into AI now to help generate reporting. Like we're stepping up certain aspects of our business that benefit from us feeding things, and it's not everyone is out there to make your life as easy as possible. So a year ago, it wasn't so simple. And now it's like, sure. It's like uploading.
That's awesome.
Remember like 10 years ago, you'd upload an image to the web and it will add a frame to it or a funny like caption. Yeah. It's gonna be pretty rudimentary for our kids, that's for sure. And even for us right now.
That's pretty awesome. Awesome. Okay. All right, so shifting gears to Securitize. So I don't know, these are two smaller companies, right? Securitize and Onramp. Onramp kind of caught my eye because it's in like this RIA space, and that's a space, like Clint and I, we operate a lot with those guys, right, in the RIA space. But all right, so like Onramp helps advisors buy crypto for clients, or for really RIAs, right? RIAs clients. In my travels out with advisors, there's definitely some advisors that are like really into this, like really into crypto. Okay. Like what are you seeing, man? Are you seeing like advisors starting to adopt this stuff and they're buying it? And if they are they using these firms like Onramp to get exposure to Bitcoin or Ethereum or any of the other coins?
Man, I think this is a dangerous, again, you have to have, we're now seeing the regulation step up in a big way, right? You have BlackRock entering the space on the Bitcoin futures. You have Bitcoin and Ethereum futures been regulated by the CFTC, so you could trade those. So our recommendation to our firms and the advisors we work with has been very simple. Allocate to a manager that trades these in the futures markets, right? Allocate to managers that do these things. Because if you're going to be recommending clients in there and there's no legal precedent, do you really want to be operating in that gray area in this regulatory regime? And I think that regulation's a good thing. You need to have regulation on your side. And so I think a lot of people jump the gun, and I'm not challenging the merits. You all know that I'm a big fan of crypto assets and the introduction of this asset class. But at the end of the day, when you're allocating, real client money to this thing, I think you need to be with managers who do this in the futures markets because you have a regulatory precedent set, and that's the CFTC managing it. So that's my recommendation. Most of the firms that we deal with, that's the way they approach it.
Okay, so futures though, not like a separate account of a guy doing crypto coins in a wallet or something.
No, I mean, think about what you've seen happen with these exchanges, right? Like at the end of the day, your trust, and I'm not challenging the exchange legitimate business or anything like that. I'm just saying what has happened with these exchanges has been super negative for the space in terms of allocating and putting client there when they aren't really custodians. So I think there are a few that are regulated as trust companies or what have you, and I'm not going to mention names, right now. But, there are some that are regulated as trust companies. They are custodians and safekeeping of assets, and that's part of their duty. And in that, I understand keeping client assets there and maybe having an advisory relationship, as long as your client agrees with this type of advice and advising a client. That's great, right? But that's a custodian. Most of these exchanges were not or are not custodians, and you've seen the disaster that's happened on the back of FTX and a lot of the leverage in the system, et cetera. And so I think, my recommendation has always been allocate to managers who are doing this in the futures markets, because that is the place where you at least have the regulators on your side. And that's been in my opinion, I don't know what, that's been a good way to play it, right? At the end of the day, that's been a good way to get exposure. You've got managers who are either trend following, they're managing volatility strategies around it. They can go long, short.
Right.
I think that's been a great way to get exposure to the asset. And that continues to be the way I recommend it currently.
Got it. I think I saw that an ETH futures ETF get approved this morning by
I don't know.
I swear I saw that. I don't know.
Maybe.
I'll maybe next week I'll update you guys. I was almost positive I saw it, but okay. So Nick, these guys, why this kind of caught my eye is the RA connection, but also they're like securitizing LP interests of private funds and then trying to like let people buy and sell those like tokenized interest of the LP interest. So like to drive that home, like I could start a venture fund. Okay. I could have LPs invest into the fund, and then they could take their interests, like they have, 1,000 units of an AG Dillon fund, and, sell it to another person. And that transaction can just like happen, and it happens through these tokens.
Right.
Right. So
On the blockchain.
like, I got to tell you, I work with Morgan Lewis. Okay. My lawyers, I think heads would explode if I told them that I was
exactly
going to do.
where my head was going.
So like what? What do you think,
chatted
man?
on the 506C, and like imagine trying to accommodate a 506C when you're spinning up all these different holders with each.
Oh, well,
right?
I just bought LP interest for a fund, that I just did, and we had 6 legal agreements, and it took 2 months to negotiate everything. I don't know how a token like helps shorten that. You know what I mean? Like instead of wiring the money, I take USDC and I send it across. I mean, like I don't know.
Now I do wonder. So my relation to someone being an accredited investor and being able to affirm this, that is something that could become part of the chain, right? So if all of a sudden you had that burden of proof is put to the blockchain potentially, and also I'll say not certain on all this stuff and how it works. I'm not a blockchain evangelist per se, but I think a lot of the technology could be coupled with user data alongside of what the actually underlying connected tissue or asset would be.
Right.
Yeah, there's a world where this could work extremely well as long as you can continually update your own proof beyond
right.
proof. Yeah, I don't want to.
No. I follow.
Conversation we had about proof of stake like a year ago.
Of work.
Not that, but actually proof of accreditation and things like this. It could be really interesting. Yeah.
Okay. Yeah. I look. What I think would be interesting is if I could get my lawyers to look at their fund docs, right, or their transfer agreements or whatever purchase and sale agreements, and said, yeah, okay, fine, Aaron, like we'll sign off on that. And then all the buyers' lawyers signed off on it. And now all of a sudden we didn't have to do any legal negotiation. Like that is valuable, but has nothing to do with crypto.
Oh, no, it does. Smart
Tokenization.
contracts. No, think about it. Smart contracts, right? So this is tokenization of an
right.
asset. I completely believe that this is the future of all investing, is everything will be tokenized. I actually think in Canada, it would work for housing, right? At the end of the day, when you have the price of interest so high where it's only refined to a small percentage of the population in any asset, whether it be commercial real estate, now residential real estate in a lot of marketplaces, right? LP interest, whatever it is, anytime you have that and those LPs want liquidity, tokenization could be a solution, right? You tokenize it, right? You can create everything on the smart contract. You make it easy. You make it not frictionless, but less friction, right? In terms of the transaction. And yeah, it's bad for lawyers. It's bad
But
for
let
2
me-
months of
But Clint,
hourly billing.
let me ask you though. Because okay, so like I could see a smart contract making sense. So like in this transaction that I just did, there were 6 documents. Okay, there was like 5 parties involved because of the way it worked out. Like it was like 3 buyers for 1 seller, and then you had the venture firm in there that was running the fund that we were buying the LP interest in. So like everybody had to sign off on everything. So you can imagine what that looked like. So I could see a smart contract where it's like, do you approve this agreement? Number 1, yes. Number 2, yes. Number 3, and then it goes to the next guy. And then if everything was good, then the money would just be sent. Yep. Right? Like that is my understanding of a smart contract. That said, I still don't think my lawyers would be okay. They're like, what is the word? Like in the second paragraph on the 3rd page, like, I don't like that sentence. I don't know how you avoid that, right? Unless it's like, standard document. Like in the mutual fund world, they've gotten okay with that because the DTCC is like backstopping everything. They're clearing all this stuff, right?
Hopefully,
so like
I think that's the hope, right? They standardize
everyone
everything
agrees.
onto a smart contract, and that becomes the standard of transaction. That becomes the SOP.
So this is what I would say, and this is maybe a little, like, you can tell I'm like battle scarred from this, right? So like, like but this is what I'm saying. The legal part, yeah, man. The legal part is the part, and that has nothing to do with the block. Like if you could come in and say, these are the docs, you have to use them. And like everyone said, okay, fine. Like that's the value, but I don't think that has anything to do with the blockchain. Like the 3 of us could get our lawyers to all agree on docs and we could trade with each other all day long, old school. And it's the same thing, right? I just don't know why that
it replaces.
It does replace the lawyers because now you don't have to review it all the time. But I guess if you have to use technology as a catalyst to get the lawyers to all nod their head and say yes, then I mean, maybe that's okay.
Yeah.
Right.
Yeah, I think it's just that initial barrier to entry. So we actually used a technology called a Figure in and around cap table management, and instead of going the traditional Carta path, and everything was meant to be much easier for subsequent rounds and workouts and things like that. But it's all about the technology of can you make it simple the first time, so that you want to use it on a repeated basis, and that's what the jury's still out on. Because I think the first go around, not only do you have to deal with doing it the old school way, you have to do it the old school way, and then make it comply with the more rigid framework that you're trying to set up for the future. So yeah, we've not had a brilliant success with it, but there are companies out there that are focused on it for sure, and Figure would be one.
This tie-up's going to be interesting. I'm sure what these secure guys are trying to do is get like their alternative funds tokenized through to these advisors and let them buy
distribution channel. That's the whole point of it.
Yeah,
which I don't know. I haven't read too much about Onramp's penetration to the RA space. I'm not sure.
I heard it wasn't doing so great. There were some high profile people that had left. It was like one of those things, Clint. Yeah. I bet if you put 10 RIAs in a room, though, and you asked them what an LP interest was, and they'd be like, I don't know. You know what I mean? Like, it's like maybe 1 or 2 of them would know what it is. So like, I don't know. This is going to be interesting. I mean, buying and selling LP interest to get exposure to private assets is, I think, actually very smart, right? Especially for more of a retail investor as opposed to investing in the primary. I mean, if you can get in the primary, that's great. But if you have the choice of buying into like a second-rate fund in the primary or buying LP interest in a top-rate fund, I think it's something interesting to consider, right? I don't know if a lot of people do that. So, I mean, maybe the Securitize guys are onto something, if they can get, world-class.
It's going to get more popular now. Like you're already hearing about NAV lending in the private debt space. You're hearing, there's liquidity. People need liquidity right now.
Yes.
And LPs need liquidity. And so if you're going to do it, now is a pretty good time to do it in the middle of a credit crunch.
You know what, Clint, you're right. Because I was just talking with 2 advisors like this past week, and they were like, how do we get liquidity out of a venture capital fund? I'm like, well, I'm not going to sell the underlying position, but if you come and talk to me, I'll help you sell your LP interest to somebody else. Right. And that's how we'll get liquidity. And they're like, I don't know what that means. So I explained it's not like a mutual fund when you go and you make your redemption order into the fund and the fund sells stocks or whatever they're doing and then returns cash to you. Like I'm literally going to take your ownership in the fund, those shares of ownership in the fund, and sell them to somebody else. I'm like, oh, that's like, I didn't know you could do that. I'm like, yeah, this is how we'll get you liquidity. It's like, what's the difference? Your client gets the cash, right?
Yeah,
So
they get their liquidity.
yeah, it's very interesting. So, okay, fellas, that's what I had. Anything else? Anything else on your guys' mind for the week? What's hot?
Jackson
We hit
Hole.
IPOs. Jackson Hole? Oh yeah, it's coming.
Yeah, Jackson Hole, man.
Ooh,
It's coming.
wrong month.
Exactly.
Got to get out there with some skis on.
Yeah, right.
No, I think we should dedicate some time in a future week to the LP stakes as a whole. I love that topic, but I know we got to wrap it up. So Jackson Hole. There you
Yeah,
go.
the topic, the LP stakes is a really interesting space. I think for retail investors, I think it's super interesting space. But okay,
I wouldn't mind
Fellas.
investing in it, right? Like buying secondary LP stakes. If you can get really top level funds for LPs that need liquidity, that's not a bad place. Becoming a liquidity provider. So more next time to Nick's point. I love that.
well, Liz, yeah, you're right. We'll stop. I could probably talk about this for another hour. All right, so we'll stop there. Maybe next. Well, we will. You know what? We will. We'll talk about it next week, right? No problem.
Let's
Done.
do it.
LP
Let's do it
stakes
Monday.
on the agenda. All right. Okay, fellas. I appreciate you guys. Thank you.
Hey,
All right,
thanks, guys.